Good morning. I'm Rashawn Gidwani, and you're watching the Daily Morning Note. It's Monday, the 13th of March, 2023. Here's the Week 11 equity strategy from the head of research for Phillips Securities, Paul Chu. The Silicon Valley Bank collapse just clipped the Fed's ability to raise rates. This is not a credit event, but a collapse in bond prices. The bank borrowed from depositors and bought the safest assets such as government and mortgage bonds. The spike in rates and bond losses cratered its balance sheet, triggering panic among depositors. The contagion is enormous in the US, which the Fed cannot ignore. The direct impact is business failures from loss of deposits and the inability to refinance loans. The indirect impacts are bank runs across other regional banks, tighter credit standards, and the selling of other assets in the hunt for liquidity. This too shall pass and can pass faster if Fed discounts SVB bonds at book value or small discount. US bank ETFs look like an opportunity. There are two key distinctions with Singapore banks. Firstly, SVB held more assets as securities at 57%, more than triple Singapore Bank's 15%. Singapore banks also face bond losses, but a higher portion of their assets were variable rate loans where they could pass on the higher interest rates. Secondly, while quality or permanency of deposits is difficult to ascertain, SVB deposits almost tripled over 3 years. In comparison, Singapore banks only rose 22%. The sudden spike for SVB does suggest the immaturity of the deposits. Singapore's stocks dropped 1.2% on Friday. The banking trio slid between 0.9 and 2.2%. The shares declined by 1.7% over the week. Wall Street's indexes fell on Friday as investors stressed out about the health of U.S. banks broadly after regulators had to close a high-profile lender to the technology sector, overshadowing the February jobs report. OCBC and UOB's Central Provident Fund investment account customers using their ordinary account savings will soon be able to buy Treasury bills online. The start date is March 31st for OCBC customers and April 22nd for UOB customers. Thai Beverage is seeking to delist its subsidiary Oishi Group from the Stock Exchange of Thailand. On March 10th, the Food and Beverage Group announced that its board has approved the group's plan to make a tender offer of all the 76.3 million shares in Oishi Group at 59 baht per share. Bausted Singapore, the acquirer of Bausted Projects, updated in a bourse filing that it has garnered 86.55% of the total number of shares in its main board-listed real estate subsidiary. Southern Alliance Mining is expected to report a net loss for the 6 months ended January 31st, the Malaysian-based iron ore producer said in a profit guidance issued on Friday. Construction services provider Sisma Holdings posted a net loss of 2.7 million Singapore dollars for the 6 months ended January 31st, 2023, due in part to higher costs. The first half losses represent a reversal from a net profit of 3.1 million Singapore dollars posted in the corresponding period a year ago. Mainboard listed Sunrite reported a narrowed net loss of 1.3 million Singapore dollars for the 6 months ended January 31st, 2023, less than the net loss of 1.5 million Singapore dollars in the corresponding year ago period. U.S. non-farm payrolls increased by 311,000 jobs last month, beating estimates of 205,000. Average hourly earnings rose 0.2% last month after gaining 0.3% in January. The fallout from the collapse of Silicon Valley Bank is beginning to spread around the world. Startup founders in California's Bay Area are panicking about access to money and paying employees. Fears of contagion have reached Canada, India, and China. In the UK, SVB's unit is set to be declared insolvent, and it has already ceased trading and is no longer taking new customers. Phillips security research analyst Glenn Thum says Singapore banks differ from SVB as the majority of assets are in loans. Singapore Bank's ratio of securities to assets is 15% compared to SLB's 57%. While Singapore banks also face bond losses, the larger composition of variable rate loans results in the ability to pass on the higher interest rates to customers. Furthermore, while the quality of permanency of deposits is difficult to ascertain, SVB deposits almost tripled over 3 years. In comparison, Singapore banks only rose 22%. The sudden spike for SVB does suggest the immaturity of the deposits. While SVB moved the majority of their fresh deposits into securities, Singapore Bank's focus was kept on loans growth, and with the rise in interest rates, the higher funding costs could be passed on directly to their customers as the majority of the loans were on a floating rate. Tesla is recruiting Chinese and Korean materials suppliers to help lower the cost and boost the energy of its newest battery cells, even as the company struggles with battery-related performance and production issues that have helped delay the launch of its futuristic Cybertruck. Meta Platforms is exploring plans to launch a new social media app in its bid to displace Twitter as the world's digital town square. We're exploring a standalone decentralized social network for sharing text updates, a Meta spokesperson told Reuters. Ford Motor said on Friday it was on track to resume production of F-150 Lightning vehicles on Monday after the number 2 U.S. automaker recalled 18 electric trucks due to a battery cell manufacturing defect. In our research section, Phillips Security research analyst Glenn Thum remains overweight on Singapore banks. Bank dividend yields are attractive at 5.7%, with possible upside surprise due to excess capital ratios and push towards higher ROEs. Singapore banks differ from SVB as majority of assets are in loans and higher interest rates can be passed on to customers. For TDCX, Phillips Security research analyst Jonathan Wu maintains his accumulate recommendation with a target price of $12.10 US. The last close was $10.40 US. For Q&M Dental Group, Phillips Securities head of research Paul Chu maintains a buy with a target price of 0.47 Singapore dollars. The last close was 0.355 Singapore dollars. That's all for today. For financial news, tune in weekdays at 8:30 a.m. live on YouTube and Facebook. Please like and subscribe for more. See you again and have a great day.